the cryptocurrency broker, teams up with a 401k provider called ForUsAll. It's a company that basically manages 401ks for about 400 clients that make up $1.7 billion of the $22 trillion 401k market as a whole, because there's business for everything. And what's happening is Coinbase is allowing those clients through ForUsAll to invest up to 5% of their portfolio in cryptocurrency. And ForUsAll is allowing 5%. So Coinbase is just the broker. And this is interesting because we're seeing a push into more alternative investment strategies in retirement investing, which is interesting. Try to get a little bit more alpha, right? And that's kind of evidence that these riskier assets are starting to get on the mainstream. More people are saying, "We want to get some of that alpha. We kind of want to get a piece of that, right? We don't want it just to be this asset that exists off into the distance. We want it to be something we can trade." And they won't let them go above 5%. Like one of the quotes here from I think it was the CEO, one of the guys at ForUsAll says. They're not going to let my people YOLO Dogecoin to the moon. So there's a concerted effort here to make sure that this is done safely. So I don't think it's going to have any really material impact, but I think it's an interesting concept when we talk about risky assets and people putting money into it that they necessarily can't afford to lose. Right now it seems small. It's a very small part of the market, very, very tiny, like test case. But if that expands, right, and you get more people saying 5%, 10%, 15% of my 401k or my pension, right, more funds investing in these things, I think what you'll start to see is there will be more risk in that if it continues to proliferate and get bigger and bigger over time, because you just have more exposure to that risk. That's something to watch, because that kind of echoes like 2008 bubble or asset bubbles. Still very small. I don't think there's any fear of it now. And I think alternative investments are good for these portfolios to kind of size up and get more in there. I just think we have to watch and be careful and make sure it doesn't get out of hand. But I still think it's interesting. It's definitely a big, a slower growing kind of industry now meeting a higher volatility asset class, right? So to see those changes, and we may see more of those changes. So I definitely think that's very interesting.
It definitely sounds like a type of like clickbait when it comes to, hey, you have your 401k. Hey, you've heard of all this crypto money coming into the market. Do you want to throw in 5% of what you are not really touching ever? It's already an investment. It sounds like an awesome way to grab their 5% and take other people's money and use it into the crypto market. So, I mean, I love this news because it only just shows the continued confidence in where crypto is going. And as a full advocate of crypto, we're going to ride this one to the moon, baby. All the way to the moon. We're just not stopping.
Oh boy. Well, yeah. So as I said, definitely something worth trading, but it's definitely not. I don't think it's endorsement of it as a currency, but as an asset, sure. People want to capitalize on that. They see like crypto going from $30,000 to $60,000. So like, hey, why can't I put some of my portfolio on that? You should let me do that.
Yeah.
So they're kind of branching out, and so yeah, I definitely think it's very interesting, and we'll see how this plays out. I mean, obviously, if you get a big percentage of your pension in there, then all of a sudden cryptocurrency drops. That might hurt, because usually pensions and 401ks are, the retirement fund where you're storing money for when you can't necessarily make as much money, right? Generate as much productivity to keep bringing capital in. So, but I think it's good they're starting out small and slow, and test out the waters. So definitely not going into the state that we have for other asset bubbles, trying our best, but we'll see how, if our desire for money gets the better of us as human beings. So,
well, that's
it's definitely going to be a riskier asset in the portfolio where everything's all mutual funds. They're actually going to put a crypto in there, 5%. I mean, shoot, if the crypto ends up overtaking that whole portfolio in gains, well, they will say that it was a good bet for them.
Well, and here's the thing: there's only like very few ETFs that have come out, so we're still waiting for mutual funds. We're still waiting for someone to make their own type of S&P 500 for Coinbase, or for cryptos.
I mean, we're just waiting for those. Waiting for those large companies.
Like, there's nothing. Like, we have nothing, and so
it's definitely a positive direction for people who want to get exposure in a safer way. And so yeah, I definitely think this is interesting news, and we'll have to keep monitoring this and seeing how this changes, not only for retirement style funds, but also with how more volatile assets are getting incorporated. And like Jeremy, if the gains of that from the portfolio gains of the alpha of everything else, there could be an opening for more percentages, because people might get demanding and say 10% or 15%, because we had 5% and we made this money. I want to be tripling the amount of money by having 15% of my portfolio in there. I think Jeremy's very right on that. If crypto keeps going up, at least we make a lot of money. We could see this expanding.
And the closest thing that comes to an ETF on the New York Stock Exchange would be Coinbase as a stock.
Exactly, that'd be your best kind of exposure to the broker itself.
Mm-hmm. So. Just need to wait on Goldman Sachs, JP Morgan in order to make an ETF or something.
Need a big fund with money to back it up.